All right, so let's go ahead and finish up the chapter 7 and 8 perpetual inventory exercise. So here where we left off was, let me see. I believe we just finished up the 18. So now we're just going to finish up the rest of the day. And here in my general journal, yes, we left off on the 18. So let's go ahead and go read the scenario and see what happened next on May 20th. So what happened here?
You purchased 400 mugs at 280 on account with terms and free cost of 80.
Okay. So where do you want to go first? You want to do the journal or you want to do the inventory worksheet?
We can do inventory.
Okay, let's go ahead and do inventory worksheet. So we purchased 400 items at 280. So here we are. I'm going to go ahead and put in the date for May 20th. We purchased 400 items at $2.80 with a freight of 80. Okay, so let me format this. So what's my total purchase here?
1120.
1120. And what's my total cost here?
1200.
1200. And of course, now we're just going to add it directly in here because we are doing moving average. So we're going to add up our quantities. So what's our total quantity here?
970.
And what is my total cost here?
28, 30, 31.
28, 30, 31. And lastly, what is my new cost per item? Average cost per item.
2.917845.
Yes. As you can see, Excel has picked up a pattern, so it just automatically calculated for me. So that's what's cool about Excel too. If you don't intentionally put in the formula, Excel can recognize what it is, or if you've already pulled the formula down all the way through the cells, it will just automatically calculate for you. But there you go. Good. So here we entered in a new batch. Now we also have to remember we have to journalize this. So May 20th, how are we going to journalize this?
Sales.
Not sales. We didn't sell anything.
Oh, yeah. We bought, purchase.
Mugs.
Yes, we purchased mugs. And I believe mugs was 150. And what is going to be my credit account?
Accounts payable.
Accounts payable. Okay, which is 201. And from my calculations from my inventory worksheet, I know that it should have been a grand total of 1200. Okay. And I'm also going to make a note here that I bought this from Cuppy's Co. I bought 400 mugs at $2.80 each. And I also was given terms 5%, 15, net 30. Okay. All right, let's see what happened next. So on the same day, what else happened?
We sold 30 mugs at $10 each
Yes,
for cash.
good. We sold 30 mugs, $10 each for cash. So what are we going to recognize here? Cash, yes, good. What else?
Sales.
Sales and sales tax, yes. Okay, so again, that should be cash is 102. Sales should be 401. And my sales tax payable should be 230. All right. So what was my total sales?
300.
300. What is my tax on top of what is the tax I will collect from that?
24.75.
2475. And my total cash? Yes, 324.75. And I'm going to indicate here that I sold 30 mugs. All right. Okay. What else do I have to also include?
Cost of goods sold.
We also have to include our cost of goods. So we need to update our inventory. So 520. So we have a cost of goods sold. And we are taking it right out of our inventory mugs. So cost of goods sold was 501 and we have 150. So let's go ahead and enter that in our inventory worksheet. So on 520, we sold 30 mugs. At what price or at what average cost is each cup?
2.9.
Good. So then what's my total cost of goods sold?
87.54.
87.54. Good. Of course, now that I have my new, I subtracted out 30. So what is going to be my new quantity? Okay. And what's my new total cost?
27.15.77.
Good. And of course,
Something.
my new average cost per item is roughly the same. It's just changed by, again, 10,000th of a penny. Right? All right. So now that we solved for our cost of goods sold for $87.54, we need to indicate that right here. 87.54. And then, of course, I'm going to also indicate right here that I sold 30 mugs. All right. So then, what has happened next on May 22nd?
Customer B paid in full with cash.
Okay, so let's go ahead and take a look. When did customer B even made a purchase? So let's see. I believe right here on May 12th, customer B wanted 60 mugs and he wanted it on an account. But what else did customer B do the following 3 days later?
Returned.
He made a return. He returned half the products. So now we have to go ahead and recalculate our new amount that he actually owes us. So let's go ahead and look at our journal, how much he actually owes us. So if on May 12th, okay, here he is, we sold a total of $649.50. And then we know that we also gave back to him $324.75. So that means he owes us $24.75 as well. Okay. So how am I going to journalize that he's going to pay this in full with cash? Do you do it? Is that going to be a debit or a credit? Why would you debit accounts receivable? Is he owing us more money?
No, we would debit cash and then credit accounts receivable.
Exactly. So we're not increasing what he owes us, right? He's not giving us more things to owe. He's reducing what he owes me. So I have to decrease it with the credit. So May 22nd. So yes, I'm going to be debiting cash because that's what he paid me in. And I'm going to decrease the amount that he owes me. All right. So again, my 102 and 103. And from here, I know for sure that I'm supposed to go, just to make sure that this is correct, I'm going to cell reference and just do my calculation right there. So I'm going to pull the number from the May 12th. So I know that he owed me originally the $600. And I know that we also gave him back this $324.75. So therefore, he owes me $324.75 and he paid me in cash. All right. Now, before I even go any forth, we need to also make sure, did he make our discount period?
Yeah, so I was just going to say, didn't he meet his terms? I thought it was 10 days.
Yes, it is 10 days. So let's take a look at that. So on we're just determining how much did he actually owed us. So let's go ahead and take a look. So on May 12th, we gave him terms of 10%, 10 net 30. When did he pay us?
22nd?
22nd. And how many days is that?
10 days.
That's exactly 10 days. So now we got to go back and we got to adjust this because now he actually got a discount. Now, how much is the discount on? Excuse me.
324.75.
$324.75. So in this case, I have to move this because the discount is actually going to be a debit account. So what account am I going to be using? Let's look at my chart of accounts. What account would I use? Yes, number 405, sales discount, right? Because he's our customer. He got our discount that we offered him. So account number 405, sales discount. Okay, 405. And then now we could go ahead and place our accounts receivable. Okay, and this was account number 103. So from here, we know that he owes me $324.75, right? But how much cash are we going to be actually receiving? We're going to be receiving less because he made the discount. So if we go ahead and take a look, how much is he getting a discount off of? All right, let's look at the scenario again. If he came to my store, purchased 60 mugs, and then on the 15th, He decided to return half of them. He returned 30 of them. So how much are we actually discounting him on?
30.
On the 30, okay? So, and then 30, and we're discounting 5%, right, off of the original price. So what is going to be my total discount here?
Is it 5 or 10%?
It was
It-
10%. Yeah, it should be.
Oh, sorry.
32.48.
Okay, it's
Yeah.
32, 47, 48.
okay. Now, what does that include? If it's 32.48, what does that include?
Yeah, that would include like the tax.
Yes, you can. Can you discount tax?
No.
No.
Absolutely not. So you have to only discount the original selling price. So right now, I need to calculate 30 items at $10, so that's 300, and then I can go ahead and do my 10% discount off of the 300. So how much is my discount going to be?
$30.
It's going to be $30. Correct. All right, and then whatever 324 minus the $30 is going to give you your how much cash he's going to give me. So he should be giving me $294.75. Okay. So just remember, this is the tricky one, especially dealing with sales discounts. You can only discount off of the original amount. No tax, you cannot discount tax, you cannot discount freight or whatever it is. Maybe you had to ship the items to them. You cannot discount any of those. Those are all standard and yes. Okay, so I'm going to go ahead and indicate here that customer B paid in full and he got a 10% discount. Okay, good. So because he's paying for the things that he owes us, does this affect our inventory worksheet at all?
No.
No, because he already paid for what he bought. Okay, or he's paying for what he bought. All right. So now on the 25th, what else had happened that same day?
We sold 15 mugs at $10 each for cash.
Good. We sold 15 mugs. So here is our standard 522. We sold for how much? For what? Yes, we got cash for this. Yes, we did. We also need to recognize what?
Sales. Sales tax.
Okay, so cash is 102, sales is 401, sales tax is 230. All right, so how much is my total amount of sales?
150.
150. How much tax am I going to be collecting?
1238.
Oh, 1238. We went down. Okay. Good. And then lastly, how much cash am I going to be receiving?
It's 162.38.
162.38. And I'm going to indicate here that I sold 15 mugs. All right. And of course, what else do we need to also include? So I'm on my new journal here.
Cost of goods sold.
We also need to recalculate our cost of goods sold because we got rid of inventory. I think cost of goods sold was 501, 150. All right, so now we're going to go to my inventory worksheet And we are going to indicate that we sold 15 mugs. All right. At what price or at what cost?
2.9178404.
Okay, so that should give me a grand total of
4377.
All right, so let's go ahead and update our inventory. So what is our new quantity?
925.
And then what is our new total cost?
26.99.
$26.99 even. And then lastly, your average cost per item should be almost identical, except it's off. It decreased by 10,000th of a penny. All right, there you go. So now that we solved for my cost of goods sold, I can go ahead and enter it into my journal. So 4377. All right, and then I'm going to go ahead and indicate it here that I sold 15 mugs. Okay. All right. Then what has happened on May 25th?
We have a sale, a Memorial Day sale, mugs 40% discount.
Wow. Okay. So we decided to have a in-store wide sale for Memorial Day. We decided that we're going to have all of our mugs be 40% off on a discount. And how much did I sell in total?
175 for
We-
cash.
Correct. Okay, so let's go ahead and calculate this right now. All right, so we have a sales discount. So what are we going to be recognizing in our journal? We're going to recognize sales discounts. Okay, I'm going to go ahead and put cash first because that's what we received. We are going to be doing a sales discount. What else are we also including?
Sales tax.
We got to do sales tax, but it's still going to be on the credit side because we didn't charge it and then we have to revoke it. We are charging it right then and there. And then lastly, we have what?
Sales.
Yes, good. Sales. Okay. So let's go ahead. Let me see. Cash is 102. Sales discount should be 405. Sales tax is 230. And lastly, sales is 401. Okay. So let's go ahead and first determine how much total sales am I actually going to encounter. So remember, we need to calculate it based on the original selling price. So how much did I originally sell each one for?
$10.
Correct. And I sold 175, correct?
Yes.
So what's my total sales?
1750.
1750, all right? And then now you could go ahead and apply the discount. My discount is 40%, right? What's 40% off of my 1750?
700.
700. So, therefore, what is going to be my sales tax? It's going to be off of 1050, right?
$86.62.
8660. What's after the 2?
It's the 5.
5?
So
So,
it's
yeah.
86. Yeah.
So remember, you always round up if there's a 5. So then how much cash am I actually going to be receiving?
1136.63.
1136.63. Okay. Good. All right. So I'm going to go ahead and indicate this right here that I sold 175 mugs. And then I'm also going to indicate Memorial Day sale, 40% discount. Okay. Good. And then, of course, what is also going to be the second thing I need to put in here?
Cost of goods sold.
We need to update our inventory. Cost of goods sold
Mugs.
and mugs. So now I'm going to go to my inventory worksheet and let's go ahead and solve for my sale for the 175 mugs. So at what price is going to be each mug? Or I'm sorry, at what cost am I going to calculate for each mug?
The 2.9178378.
Good. So what's my total cost of goods sold here?
510.62.
Good. So let's go ahead and update our inventory. So what's my new quantity now? 750. And what's my new total cost?
2188.38.
2188.38. And then, of course, recalculating my new average cost per item, it increased by another 10,000th of a penny. So if you remember from before, it was originally 91784. Then it dropped down to 19783, and now it's back up to 91784. So as you can see, every time you have a new item in here or we sell something, the average cost per item will fluctuate. And as I said before, if you are going to be selling thousands and thousands of items, that small mere factor right there, if you sold 10,000 items and you calculated and you rounded off too early, you could be losing $1. Yeah, and you're gonna be thinking, wow, that's so crazy, but think about it. You're not just gonna only sell that product. Yeah, you may lose $1, but imagine if you're doing this for the rest of your business. Think of how many thousands of dollars you'd be actually losing every time you make a purchase or every time you make a sale. So, yes, this isn't like the only item. You don't only just sell coffee mugs. If you do, well, you might go out of business. But, that's just a little heads up there that's why it's so important that you don't round your numbers until the very end. Okay. All right. So now that we have our cost of goods sold for 510.62, let's go ahead and plug it in. 510.62. Okay. And then lastly, let's go ahead and indicate that I sold 175 mugs. Okay. So now let's go ahead and see what has happened next on May 28th.
Customer C wants to buy all 50 black mugs.
Okay, and what else happened here?
We offered him an additional 10% discount.
And then how did he pay us?
Credit card.
Okay, so now we have a few things that we need to look at. So customer C decides to come in and buy all 50 black mugs for $10 each. Okay. And we decided to give him an additional 10% discount. And he paid with a credit card. So how are we going to journalize this?
cards get counted as cash, right?
Okay, so what happens when a customer does charge their card? Is cash actually given to us?
No,
Where does the money go?
into the bank.
It goes into the bank. So let's go ahead and look at our accounts. Exactly. It would go straight into our checking account. And we'll talk about interest in chapter 10.2. Okay, so here there you go. Or actually, we're actually going to talk about that after today. Sorry. We're going to talk about in chapter 9. So it's going to be in the next lecture after this. So yes, it's going to go straight to our checking account. So my checking account is number 101. So that's the first thing that we're going to recognize is checking. What else do we need to also recognize?
Sales.
Okay, we're going to recognize sales.
Discount.
We're
Sales
also
discounts for that.
exactly. We're going to also recognize our sales discount because we offered him an additional 10% on that. Yeah, I think I put sales discount. And then now we can go ahead and recognize our sales. What else do we also have to charge him too?
Sales tax.
Yes, we also have to we have to also charge sales tax. So again, sales discount is 501, sales is 401, and sales tax is 230. So here, let's go ahead and calculate how much his total sales is going to be. How many mugs did we sell?
50.
We sold him the 50 black mugs. So what's my total sales here?
500.
500, right? And because we're giving him a discount, how much was the discount? How much did we offer him?
10%.
We offered we offered him 10%. So it's going to be this times 0.10, $50. All right? So then how much tax am I going to be charging? How much is going to be my tax?
Yeah, 3713.
Yeah, I figured my calculation would have been wrong right here. So this would have been equal round.
You gotta do up the 450, right? Not the 500.
Yes, it's because the way I punched it in my in the formula, I didn't add an extra one. So what happened was it recognized that I took I'm taxing off the. Never mind. I taxed off of the 500. I don't know why I didn't recognize that I subtracted it. So 450 times 8.25%, comma 2, 3713. Okay. And then lastly, how much cash or how much cash or how much is my payment going to be received?
For 8713.
487.13. And of course, because he paid with a credit card, it automatically goes straight into our bank. But we'll learn what happens when we actually accept credit card charges because in QuickBooks, we'll see that you're not going to actually be getting the full amount of sales because you also have to pay a small percentage for having a debt collector collecting money for you. So it's a price to have credit cards available when you're, especially when you're doing business. So we'll get to take a look at that a little bit in chapter 9. We'll talk about what credit cards do. And then, of course, when we move into QuickBooks, we'll take a look at why we needed, why they charge us that convenience percentage or whatever it is that you agree with. So here, customer C. Actually, no, I'm going to go ahead and do again. Sold, what was this, 50 black mugs to customer C. And then comma 10% discount. Okay. And then, of course, because we sold something, what else do we have to do?
Cost of goods sold.
Yes, we can go ahead and do a cost of goods sold. So because we have those black mugs available in our inventory, because we never took it out in the first place, so this is where we could go ahead and still calculate. It doesn't matter in this case. Okay, so let me go ahead and, so this is the 28. We sold 50. At what cost?
2.91784.
Okay. Giving me a grand total of my cost of goods sold to be 145.89. Okay. And let's go ahead and update our inventory here. Okay. And what is my total cost here?
2042.49.
2042.49, giving me my average cost per item to be the same as well, but it increased by 20,000, I don't know, 100,000th of a penny. Okay, there you go. Good. All right, finishing up the last section here. What happened on May 30th?
Paid off all 3 bills we owe to Copies Co. 1 check.
Okay. We decided to pay, we're going to pay all of them on 1 check. So let's go ahead and explore our purchases. So let's see. The first day in May, we made a purchase, but what happened a couple days after that?
There's a refund for 15 mugs.
Yes, we made it. We got a full refund for our 15 mugs. Okay, so we have to recalculate how much that is. Now, in this case, did we actually make the discount period as well? No, we did not. Okay, so that's one thing that we know. So all we need to do here is to calculate the difference. Like, what was my difference in my accounts payable here? Other than that, what else did we do? On May 8th, we decided to make another purchase. Okay. Did we make a return at the same day?
Yes.
Now, did we actually return the product?
No.
Okay, so but we still got our money back because we got a discount, right? Now, did we also make the discount here?
No, we missed that one too.
No.
No, we missed this one too because it's supposed to be, we bought it on May 8th and it's supposed to be 15 days later. So that would have been the 23rd of May. And we missed it. Okay, so we need to recalculate this one because we've decreased our accounts payable here. And then let's see when's the last purchase we made. So we made our last purchase on May 20th for the 400 mugs. All right. Did we make any returns off of this one?
No.
Okay, good. So then let's also look at this. So did we actually make our discount period?
Yes.
Yes, we did. So there we go. We need to also consider that we have a discount right here. Okay, so there's a few things that we have to do. Now it's up to you if you want to separate them and then include it into one page, into one check. But in this case, we're just gonna go ahead and just go ahead and do it on the side of your journal, right? Because we need to take a look at how much we actually owe Cuppy's Co. because we're paying them all in one bill. So first off, we're gonna recognize our first batch right here, right? So the first one that we have here for our accounts payable is for the full $14.25. Okay, but we made a return the very couple days after. So therefore, we subtracted out this $39.75. So now for our first bill, we owe only $13.85 and 25 cents. Okay. Then our second bill that we have, let's see, which was May 8th. Okay. We originally have the accounts payable to reflect the $337.50. However, we had to return $20.63. So in this case, my new accounts payable for my second batch should be for the $716.87. Okay. And then I'm going to go ahead and come down here to see what was my bill for the purchases on the 20th, right? Because we bought more stuff. Now here, my accounts payable is a $1,200 flat rate. Okay? So in this case right here, I owe and still owe $1,200, right? The discount doesn't affect my accounts payable. So, but I do need to take out from where? Where, if I'm going to be discounting my items, where am I taking it out from? Okay, while I let you guys ponder on that, first thing I'm going to recognize is that I'm going to make a payment to what I owe. Okay, so it is 5:30. So my total accounts payable, since I'm paying them all off in one go, as my accounts payable is 201. So as I've already calculated from looking at our information above, we have our first batch to be $13.85. We have our second batch to be $716, and we have our last batch to be our $1,200. Okay, so that's just what we owe in general. Okay, now how much am I actually going to pay? Because I also have a discount off of my items, where do I take my discount out from?
Maybe purchase discounts.
Okay, well, oh yeah, sorry. Let me take a look at my chart of accounts. You said purchase discounts, okay? Now let's take a look at this. What tracking method am I using? What am I for doing perpetual? So where is all of my purchases? Where are they all at?
Inventory.
Inventory. So if I placed everything in inventory, then I need to take away, then I need to subtract from my inventory because they're all in inventory. So again, because we're doing with perpetual inventory, everything will go into inventory. All your purchases are going to go into inventory. Everything that we take out, such as a discount, such as a return, such as a cost when we sell our items, everything's going to be taken directly out from our inventory. So in this case, we're not going to be recognizing a purchase discount. We're actually taking away from our actual inventory, which was our mugs. So that means we got to also update our inventory, okay? So if we are taking a discount off of our mugs and we are obviously writing a check, so where does a check come from? Our bank account. Okay, so 101. All right, so let's go ahead and let's take a look at this and let's calculate how much is my discount for?
5%.
5%. Okay, but let's see 5% of what? Is it going to be off the 1200 or is it going to be actually lower than that? Let me see where I'm trying to find my here it is, 20. Am I going to be taking 5% off of my 1200?
No, because that includes the freight too. So it'll be off of 11.20.
There you go, purchase. Here you go. Yes, so it's going to be off of the 11. What did you say? 1120? Yes, 1120. Okay, so what is 5% off of 1120?
56.
$56.
So here, mugs. What was it? 1120 times 0.5%, $56. So what is my check going to be written out for?
32.4612.
32.4612. Okay. So again, let me go ahead and fill in my description. I made a payment to Cuppy's Co. Okay. I've also received a 5% discount on purchases made on May 20th. And I also used the check number 201. Okay? So now that we have this, right? I still also have to update my inventory because the purchase that I made on May 20th, I didn't pay the full I didn't pay the full 1200. How much did I actually pay? Whatever 1200 minus 56 was. So therefore, because I placed everything in inventory, if I'm going to discount my stuff, it's going to be taken directly out of my inventory. So I need to make an adjustment here to my purchases, right? So here 530. Okay. Because it doesn't affect my quantity. However, I know that it's for $2.80 because that was my previous batch. And then how much, we already calculated how much my total cost was going to be, which we found out that it was off of the 1120. So my discount here was a grand total of the $56. Okay. So now I have to adjust this. So of course, this isn't going to affect my quantity, but it's definitely going to affect my total cost. So I have this minus my 56. Okay, in this case I have to add it because I put a negative there. What is my new total cost?
36.49.
20, 30, say that again, 20?
36.49.
That's not correct. 2042 minus 56
Yeah.
should not be 2036.49.
1986.49.
49. Sorry.
Yes, there you go. So then, of course, I have to recalculate my new cost because, or my new average cost per item because I'm less $56. So now I have to recalculate to spread the cost amongst the remaining amount of items I have. So therefore, it dropped significantly. That discount dropped my average cost per item from $291 all the way down to $283. Wow, that's a huge profit increase that we just got right there. Okay? Because every time we sell, we're selling our items at $10 and now we're costing them at $2.80 instead of 90 cents. That, as you can see, is going to bring your profit a lot higher. There you go. Okay? And that's it because that's all we had to do. Okay, and then we finished it off and there you go. Any questions in regards to the chapter 7 and 8 exercises? We got to take a look at a purchase returns and allowances. We got to take, or, that idea. We got to take a look at a purchase discounts. We got to take a look at a sale and a sales returns and allowance and a sales discount. So all of this was all done in chapter 7 and 8. All right. And how we did it in our inventory worksheet, as you can see, every single thing that we did, whether it's a purchase returns, a sale or a sales returns, it truly affects our inventory every single time. And because we're doing moving average, we have to correct or calculate that average cost every single time because, again, we are looking at, we're trying to figure out what to spread the amount of cost amongst our amount of quantity that we have. And every time we sell something or every time we purchase something, it affects the quantity and the total cost. So that's exactly how we do chapter 8 and chapter 7, like understanding how to calculate or weave in those purchase returns and those sales returns if it is in the scenario. Okay, any questions in regards to this particular exercise? Now let me give you some relief here. I will not test you on this, okay? All right. Huh? Did you say why not? Because this is complicated stuff. I only want you to know how to calculate